All right, that I think happens to be it for the questions. So I'm going to go ahead and go over just, what we're seeing in the market these days, what type of context we're in, what we can expect going forward, and we'll just do a little bit of a review on where we are, and then we'll call it a day. All right, so if we look at this chart, we can see that for the most part, S&P has been stuck in a range. We were range bound here, broke it, range bound again, right? We're basically just balancing within a range. And contextually, if we look at the other markets, we can see that NQ has already made a new high. The Russell made a new high today, right? So ES right now is showing relative weakness to the other markets, but the other two markets are showing us a lot of bullish price action. So the idea heading into tomorrow and over the course of next week is that the S&P has potential to break out to the upside, right? Like if we had to, um, make a guess right now, then it would be that ES would break out to the upside and catch up to the other markets. Now, whenever you have a clear divergence between S&P and the other markets, two scenarios can play out. One is that the S&P catches up to NQ and TF. The other is that the NQ and TF happen to be putting in some sort of exhaustion type top, and they fail and reverse and catch up to the S&P, right? In that case, the S&P leads, and the other markets catch up. One of these scenarios is what we're looking for, right? And either one of them is fine with us, right? It doesn't matter if it breaks out to the upside or fails and goes down, as long as that one of those plays out and it's with volume and momentum, then we can take advantage of it. So right now, our focus is still going to be on the long side. If you look at this recent price action, you can see that within this price range, basically, January 14th up till now, so for the last week or so, we have built a lot of volume right here around 37 to 39. And at this point, if we start holding above, this 39 area and the other markets remain, bid as well, they also hold up, then heading into tomorrow where, on a day where we have several econ reports out, there's potential that the S&P can just break out to the upside and go towards 1850 and 1860, right? So that's one trade idea heading into tomorrow is that if the S&P holds up well overnight and the other markets hold their breakout as well, then tomorrow we could get a breakout in the S&P. The other scenario, which right now we're putting lower odds on, is that the S&P is actually the one leading and the other markets are putting in false breakouts, right? So that's the other alternative scenario, and that'll be pretty apparent because we'll start seeing sharp down moves in the other markets, and the S&P will actually start holding below 37 to 39, and really a break of this 34.75 at this point would be a caution sign. We don't really want this breaking this area at this point. I mean, if we break, this high volume node at 32 again, and we break below here, I mean, then, it could get ugly for the buyers in the S&P, and, this thing could go all the way down towards, this 12 to 14 area, right? So in that case, it could be like a liquidation trend down type move where it goes all the way down and tests, kind of the bottom of this, the 12 to 14. I think we have an open gap down there as well. So those are really the two bigger picture ideas that are in play right now. But overall, the market has been stuck in, a balance. Today was a very narrow range day. It was an inside day. Typically, that's one of the things we look for as far as when we're expecting a trend type move. We want to see that narrowing range and that consolidation. And then we want to see a high momentum directional move outside of that range. So, that's what we're going to be looking for heading into tomorrow. And then, of course, ideally, you want to get on board that kind of move, right? So whichever direction it is, you want to get on board. Wayne is saying, if we get a balanced breakdown to the downside, should we be cautious getting on board short ahead of 1826? Wayne, I think that if like this 32 to 34 area goes, I'm thinking that the 26 is not going to hold, right? That's just at this point, looking at the charts, that's my feeling that I don't think that the 26 is going to hold again. Um, this market has, gone down several times now, right? I mean, over here it came down, over here it came down, and now the third time down here again. I don't think that there's going to be confidence in this market anymore, if it comes down yet again. I think it kind of has to hold above 32 to 35 at this point. And if it breaks it, then I think that'll be a short. I think that at that point, we might end up shorting like, 31 or 30 or something and try to ride it down to, the 1814 to 1820, levels. So I don't think 26 is going to provide support. Now, of course, it can, right? I mean, that's the thing with the market is that you have your expectations, and that's fine, right? Now, this is the RTH chart. I can have expectations like, for example, I had this support zone over here, right, based on these recent lows, and, it held 26 quarter to the tick and went back up because it was first time coming back down, right, off of 44, so it's pretty extended anyway, and that's why I expected it to work. But now, after bouncing here and breaking lower, I don't have that same level of conviction in 26 quarter holding, and I think next time it's just going to be a flush. If it doesn't work, if this doesn't hold, I think it's just going to sell off big time and could go down all the way at least to this 17 to 19 area, right, at the minimum before we get any decent bounce, but probably even lower. So that's the way that I'm interpreting it at this point.